Welcome. I am Eric with Mwade.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So, in today's quick video, we're going to take a look at GE, which was breaking out recently, and try and understand why. As we can see, the breakout here seems to have struggled. So, we see here, this level here, there was a breakout attempt, and for a while, this is a weekly chart. So weekly, 2 years of data, and this is GE. All right. So you can see here, over the last 2 days, there was a nice breakout attempt that seems to be stalling. Also down about 5% this week after that failed breakout, which of course is a red flag. Now on this weekly chart, we can now draw a line connecting prior lows. As evidenced by these lows, touching all these lows, and this right there. We get a break below that line, which is this movement here. Resistance, resistance again, or a failure, failure again, and now failure again. This most recent failure happens to be around that RSI. Yep, this area right there happens to be around that RSI 61.8 level. Now that's just a side note. In this video, I want to take a look at the monthly chart going back to the 90s. Now, I would encourage you to study this area in the, let's call it, mid to late 90s, where GE was on fire. Because if you can understand the reasons why this was more of a profitable area and why since then we really haven't seen a major move higher. I mean, it's had some moments, but for the most part, it's not been a good instrument because other stocks have broken out of this range and moved to hundreds, if not thousands, of percentage highs since their highs of 2000. So if you take the highs of 2000, in fact, let's do that. Let's just take the market itself. Now, this is the market, not a stock. So S&P 500, if you take the highs of 2000, has cleared these highs. So even the market has outperformed GE by a large measure. In essence, GE has never broken above the 2000 highs and is trading here. So, a big underperformer. Now, by the way, this underperformance of GE, as you can see here, you see evidence underperforming the market over the last couple of years. In fact, let's see this from a better vantage point. All right, so what I've done is moved this performance versus the S&P 500, and we can see when it was doing an amazing run here, it was outperforming the market in the late 90s. Recently, since about 2016, it's been a gross underperformer. And as is the reason for this video, now we're going to take a look at this failed breakout. Number one, we can see not the strongest stock in the market, and institutions are not going to play a weak stock. They're just not going to do it. They look for power. They look for strength. And so should you and I. All right, so this is now with the RSI back in place. Couple of things here. I'm going to go through this now quickly. We can draw a line connecting recent RSI highs as such and see where we end up. we end up with touching of this monthly RSI area. And again, even on the monthly, this is around that RSI 61.8 threshold. This is where decisions tend to be made. So the topside line is one view. Now, if we take a look at where we broke down, there's a trend break here, an obvious clear trend break, and that was in 2017, coming off the highs there. Now, of course, I'm going to use my uniformity method, and you can see without fail, we've come back, tagged this area with uniform action, went above it, back below it on the monthly chart, hence the current rejection and reversal lower. And now, the reason for this video. Another video here explaining why sometimes we can draw our uniformity lines, we can draw our RSI lines through a breakpoint. So we've already established that this was a breakpoint right here based on the prior line we drew, which was this line right there. In fact, let's change the width of that line. So we know that this line gives us a trend break. We come off the highs there. No questions about that. That's the market telling us that line was critical. So now what we're going to do as an example of why sometimes if you find that drawing through a previous breakpoint can actually give you more insight. What we're going to do here is draw a line connecting these lows of 2002, early 2003, and we're going to put it through this breakpoint. So let's just do it, and here we go. There. Now we can see a lot of information. For example, we see periods here where we have uniform activity support below the line, back above it for the monthly lows there. Uniform activity below the line, back above it for the monthly lows there. We get a bounce here, which are these monthly lows. Uniform activity below the line, back above it, which is the black line for those monthly lows. And then, of course, we get the break right here, constituting this breakpoint, and now uniform activity rejection on the line back below it. So in this case, drawing through the breakpoint, which is this breakpoint right there, gives us the current resistance. Now, let's say you are bullish on this stock for whatever reason. It would make more sense now that we see all this resistance. Let me bring back all the other lines. We got the uniformity. Oops, it's getting very busy here. We got the uniformity. Let me do it correctly. You got the uniformity resistance line. I know you can't see it. And you got the previous topside line. Right there. I know it's a very busy looking chart. And so what we can do actually is clean it a little bit. All right, so you got the topside line, number one. We have the uniformity line, number two. And then we have our special back test line, which we drew from here and through this breakpoint right there. All of these lines intersect exactly or are showing resistance. So if this instrument is to go higher, you'd want to see visual evidence of clearing this area. And also, which would mean constitute a clear breakout in price. Otherwise, this instrument is sideways to down because of the multitude of resistance lines. Now back to the reason for this video again is because of this, how to draw through a breakpoint here. Just find anywhere that makes sense because if you use this line, you can see that it gave you swing trade opportunities. For example, we stayed above the line for the most part in this period, which constitutes this move higher. And the same line turned into resistance many months ago, even before this last 2 weeks breakout attempt. In other words, the monthly chart had already given us resistance on the weekly during these highs on the weekly here. These highs were already confirmed on the monthly chart. And so you can draw through a resistance breakpoint. I am Eric with Mwathe.com, and I leave you as I found you, in the love and in the light of the one infinite creator. Go forth therefore, rejoicing in the power and in the peace of the one creator. Adonai, my friends, Adonai.